Whoa, 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 whoa. All right. Can everybody hear me? Please let me know if you can see and hear me. Welcome to Traders Hangout. Whoa, 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 whoa. All right. Can everybody hear? Okay. Hi, Mr. Maxwell. Um, yeah, just let me know where you're watching us from. Let me know where you're watching us from. My name is Joshua, by the way. So today, I'm so sorry. Fortunately, uh, Mr. David won't be available today. So that means our guest, Mr. Ayodeji, will have to postpone till next week. But however, I'm here to cover for that. So we still have a lot to talk. Today, basically, we're going to rub my it's called an hangout. So I'm here to pretty much chill with you guys and talk trading, right? I'm here to just chill with you guys and what talk trading. So if there's any question about trading you want me to answer, I like to see them on the comment section because we already took too long to come live. So this stuff was just like the 9 minute stuff. So Mr. Davis is pretty much not available right now. We wish we would have been able to avoid that, but we're so sorry about that. Whatever, I'm here. Why not? Let's talk. Ask me anything about trading and I'll answer you. Or if you something there's a topic on the business that you want me to talk about. Uh, all right, I see Mr. James from Kanu. Awesome, awesome, sir. Welcome, sir. Oh, Mr. Max, well, you're from Lagos. Thank you very much for watching. Uh, Mr. Michael from Abuja, thank you very much for coming. Okay, so let the question come in. If there's anything you want to ask me on the business. Okay, yeah, thank you very much, Mr. Maxwell. I just saw your question. All right, what's your take on institutional trading style? I don't know what you mean by institutional trading style. Um, all right, but I think I understand what you're talking about because there's this strategy or trading entry system in quote out there called institutional trading. Well, it depends. Institutional traders usually, I won't lie to you, with what I've seen in the industry, they don't use that. It's pretty much something they might use in some form, but that's not all about it in terms of support zone, demand zone, like supply and demand zones. Of course, they do look at supply and demand zones, but usually it's a bit different from what you see the average guy use, right? Because people just think trading is all about finding the entry and all that. It's when you talk about institutional trading in real life, What these guys do, they actually look for supply and demand zone. That's fine. Usually that's not for entry. When you look at the supply and demand zone, that's not for what? Entry. You just know that, okay, this is a place that I'm looking for a buy, which is for your demand zone, and this is a place that you are looking for a sell, which is for your supply zone. For me as a trader, I sure use supply and demand zones, but not like a lot of people will see out there. My way of using supply and demand zones is basically looking at the price elasticity. What I mean by price elasticity, I mean elasticity, sorry, that word. Okay, so that basically means what I'll do, I'll look at the distance between price and the 200-day moving average. So if price is too far from the 200-day moving average, we probably are in a supply area. So when the price is closer to the 200-day moving average, that's going to be a demand zone for me if the 200-day moving average is trending upwards, right? So that's the way I look at supply and demand zone. And usually most institutional guys, that's what they do. But however, that's not the trigger for me to get into a trade. I will usually look at where the trend is going through the 200-day moving average, while I've seen, okay, maybe we're in a support zone or usually a demand zone where prices has pulled back down towards the 200-day moving average. Then now, maybe if I want to trade, because I'm a swing trader, I usually trade daily or I usually trade the daily or the 4-hour time frame. So when I do that, I go to my time frame and then look for, say, I don't know, I have a system where I use to just follow the trend or getting onto the trend early. But however, that's just for the entry. There's other parts of trading that usually goes along with that, like my risk system. There's a lot. However, so the in quotes institutional trading style I'll see out there is rubbish. Okay, Mr. Max, what's the difference between supply and demand zones and resistance and support levels? Oh, okay. Um, if you heard what I said, supply zones are areas, are not pretty much lines. They are areas. There are areas where price would likely fall. So when I mentioned, if you pay attention to what I just mentioned, I mentioned price elasticity. This is something you should, maybe if you want to be a trader and you feel like you want to learn more about this, that's Alphagold Markets PMI trading program, which is our mentorship program, will be a great place to learn about this a lot, because it's not something I see out there. It's pretty much proprietary to us, and what I do from my own research and following people in the industry who are institutional traders. I'm telling you this for a fact. The thing is, supply zones are usually areas where price will likely drop. While demand zones are areas, they are not specific prices. They are areas where price will likely go up. So when people look at support and resistance, they usually are thinking about a line. Well, that applies. So I'll see, if I can open a chart and explain this for you, right? I'll open a chart on our previous account. So in case you want to open an account with a broker, you can use FX Premius, which is our recommended broker. I'm coming. Let me open that on my MT4. So I'll explain this in real time for you guys. I still want you guys to have value from, sticking out, even though Mr. David is not available today. Yeah, give me a minute to set this up. If you still have other questions, for other people that have questions, you can also put your question on. So we go along, together. I'm trying to open 94. Oh, okay, good. So don't forget to, ask your questions. Okay. So I'll close my screen now. Bring it on your screen. All right. Can you see my screen? Please let me know if you can see my screen. So we're still talking about uh you know supply and demand zone and support and resistance. They are very similar in a way. Of course, they are very similar in a way. Okay. I think Mr. Maxwell is very active today. Okay, Mr. Maxwell said, I think identifying resistance and support on multiple time frames help define supply and demand zones. Um, yeah, of course, you should consider higher time frames when considering stuff like that. When it comes to zones, usually I use the daily and the weekly candles for that. You can't find me using uh what's called now, the lower time frame. Even the 4 hour, I don't use it to define that. I use the daily or the weekly. I think that's more reliable to define key areas that might shift price, right? Oh, great. I see you work with 4 hour daily. 4 hour, daily, weekly. Of course, that would be the, but me, I wouldn't add 4 hour. I feel it's not as relevant as the daily and the weekly, probably the monthly. Yeah. So let's go to the chart a bit. Let's go to the chart. Let me show just my screen. I guess you guys can see my screen, right? So usually what I'll do in terms of looking for, okay, I think this is a good chart to look at, Netflix. Right. So what a lot of people would call support will be this, right? This is support. Why? This definitely will be demand, right? Or resistance. So the idea of support and resistance is basically this: price hitting a ceiling and coming down. Not necessarily in terms of support, people will just literally call this like a line here, support, and the line under resistance, and they just try to buy and sell based on that. But you can see that when it gets here, the price actually did not hit this place, so we can still consider that a, a supply zone, in terms of the fact that this is a, or we can say it's an area that price is finding difficult to break out from. And you can see that here also. It's not necessarily a line, it's more like an area. So what a good trader would usually be looking for, if you are in a supply zone above, say here, you want to be looking out for a sell signal. So if I'm seeing that price is currently here, let's say price, when price was here, I usually, after looking at my price elasticity, which is quite confidential, I don't think I can share that here, but I'm just telling you what I will do. If I see that we are in an overstressed situation, in a zone such as this, 1, 2, and we're seeing number 3 here, I will do this, then I'll go back to like the 4 hour to look for an entry. So what I usually do is, I'll draw a trend line. And one way, let me show you one tip for drawing a trend line is the way I draw my trend line. You can take it if you like. So I guess I'll change the color of this. I want you guys to see it more clearly. So I make it black so I can see it. All right, so I'll change it to a line graph or a line chart, whatever. I just draw the trend line using a line chart. So it's more cleaner to do that, right? It's more cleaner to do that. Then I change it back to the candlestick. So my entry will be the breakout of this. So you can see at the end of this day would have been my entry. This would have been my entry, because at the breakout of this trend line, we're expecting price to fall. You get, notice what I first did. I made sure I was in a supply area, an area where price is likely to drop on the daily, then go down to the 4 hour time frame to look for an entry of the breakout of this short-term trend to the upside. So that would be what I'll call a supply zone, because when in a supply zone, I will be looking for a sell. When in a demand zone, I will be looking for a buy. That's just it. So unlike just regular support and resistance, where you just say this is support, you probably buy at support and sell at resistance. But when it comes to the zoning system, it's more like an area. But however, the entry of your position is just one part of trading. your trading entry is just one aspect of trading, right? Okay, so guys, I guess I've kind of explained this stuff, right? So that's really what I feel supply and resistance, especially when it comes to the in quote institutional trading system. I see a lot of people share out there do. It's more like that, quite like it. But also, there's something I want to share with you guys. This is pretty much not a lot of stuff people pay attention to when they trade. If you are a trader, especially a quantitative trader, because you are not looking at maybe the fundamentals of, personally, I don't pay very much attention to financial data, and I do check them out once in a while, but maybe the economics of, but my decision on a day-to-day basis is purely quantitative. And I don't just mean pure technical analysis like you see candlestick and blah, blah, blah. I use pure maths for my trading. And that's what we share at our mentorship program. You see, people see trading as looking at that graph. It's an art. There's an art to it, but it's more science and more like what will I call it now? Oh, statistics, So how many of you here understand the role of volatility on your trading? I want to know if you understand the role of volatility on your trading. What do you understand by volatility? You can put it on the comment section. What do you understand by volatility and what role it plays in your trading? I want to see the answer you guys can give to us. What do you understand by volatility and the role it plays on your trading? Because this is a very important aspect in trading that a lot of traders, both new and experienced, are literally not paying attention to. And there's something I want to share with you guys tonight for coming, because this webinar will not be available for replay. But I want to share it with you guys for sticking with me. What do you understand by volatility and how do you apply it in your trading? Because there's something I want to share with you guys now. But I want you guys to share your thoughts with me so that I'll know where you guys stand with this. All right. Please put it in the comment section. I want to know what you understand by volatility and how you use it on your trading. Oh, I'm seeing some question relating to backtest. Okay, backtesting, yeah, it's basically using past data, to kind of identify if your system would have been correct, or would have been good enough to predict price with previous price patterns or whatever would have happened in the past. It's more like doing research. When you're doing that type of research, you just look at the past and see if what you are to do tomorrow would have been great yesterday. You understand? And by the way, there's an article I wrote on swablymarkets.com. You can check it out. It's called How to Build Your Own Trading Strategy. Probably you should read that. Mr. Davido. Oh, AB Davido. Go and read that article. I think that would be great for you also. Okay. Mr. Maxwell said, volatility is defined as the rate of change in price within a given period of time. Wow, awesome. That's exactly what volatility is. That's exactly what volatility is. But a lot of people know this, but they don't really know how to apply it in their trading. There's something I do, and it's a free tool right there on your MT4. A lot of people don't use it, and I feel like that's probably one of my best indicators in quotes. Like, it's not necessarily giving me buy and sell signal, but it tells me when it's a good time to buy and when it's a good time not to. Right? Okay, high volatility, more pips. Um, okay, Mr. Ubwa, what do you mean by based on supply, the law, based on the law of supply and demand? Are you talking about the volatility or what? All right. The thing is, volatility in itself, I see all this stuff you guys are putting up. Oh, someone is asking me, do you make up to 200 pips on a weekly basis? Wow. I don't really think about pips. You know why? There's something uh pro traders don't consider that. I won't lie to you. We don't really consider pips movement. I don't consider how many pips I get. It's not. That's what I want to teach you about now. Understanding volatility and price expectation. You do not trade that way because sometimes a pair on average should move, say, 50 pip a day, and you're looking for 200 pip from that pair. You can't get that. It would be an outlier for that to happen. So that's what I want to share with you today. Yeah, the indicator I'm about to show you guys helps define volatility, and I will teach you how to use it properly, right? So a lot of people don't know how to define volatility and how to properly match it with their trading. What I'm going to share with you guys now is just going to be for this live video, because after this live video, I'm going to delete this video because this video is not going to be available for replay. Although next week we'll be having Mr. David and our other guests, right? So I want to show you guys something, so you guys pay attention. So Mr. Max was saying, your indicator, okay, like I've already answered that question. That indicator helps define that, and it's not my indicator. It's free, so they're available for you on your MT4. It's just that a lot of people do not understand it and they don't use it, especially the way I do use it. And I feel it's very valuable. One of the most valuable. I do not place a trade without that. It's that valuable to me, right? It's that valuable to me. So you should pay attention to what I'm about to say. Oh, okay. Mr. About okay, yeah. I was talking about what you mean by supply, and it's based on law of supply and demand. Okay. Understand what I think I get what you're trying to say. Okay, so let's get on charts. Let's get on charts. All right. So I guess I should delete this, right? Should I? Okay. Let me delete all these lines stuff and blah blah blah. Let's delete it. Okay, delete this also. All right. So this indicator I want to share with you guys is called. It's an you see on our oscillators on your MT4. It's called the average true range. What? The average true range. So on the reset, you get it as 14, right? So my setting for the average true range is usually 15 period, which means 15 days. So I'll change it to 15. I just like 15 days. Then let's plot it. So if you have an MT4, you probably want to be going along with me. So the average true range indicator, it's a very simple indicator to use to manage and understand volatility. So the average true range indicator gives you the average movement of a particular pair within the period in terms of pips, by the way, right? In terms of what? Pips. So I want to, let's change it to say currencies. This Euro and GBP USD. So what does this mean? This is, we have the average true range on GBP USD for 15 periods saying 0.0131. This means for the last 15 days on average, price has been moving on a daily basis. That means one candle on a daily basis should be around 131 pips. You get? That's pretty much what's telling me. So if, for instance, I want to know if you guys are getting what I'm saying. Please let me know if you are understanding, so that if there's anything you want me to go back to, because I want to share something very important right now. Do you understand the concept yet of the average true range I just explained, or do you want me to go over it? Yeah, I want to know if you understand the concept of the average true range I just shared now, or you want me to re-explain what I just, because I'm not going to, this video is not going to be available for replay. Oh, yeah, cool, right? Okay, great. So I'm going back to the charts now. So let's pay attention. Let's pay attention, guys. Let's pay attention. You guys are about to learn something that will change your trading forever. Oh, okay. Mr. David, Mr. David said I should recap. Okay, all right, I'll recap for you, Mr. I'll recap for you. All right, let's go back to the charts. So the average true range, first of all, is an indicator. You can get it from your no, it comes with your MT4. Just check under oscillators, click on average true range, you see it, right? So I said it just needs only one input, and that's a period, to select the period. What the average true range does is to calculate the average pip movement of each candle for the last period of the, that's 15 periods, since we are using 15. So for the last 15 days, it's saying the normal average price movement, it's just say 131 pips or points per se. So that's kind of massive, right? So 131 pips. This means that on average, each candle should move, that is from the high to its low, for the last 15 days has been moving around 131 pips. This is a very vital information. So I'll teach you one of the ways I use it. And this is, I think, it's going to be general enough to help you with any system you are using. So how does this become useful to us? How does this become useful to us? Let me tell you the key thing now. What you want to do is, if you know the average movement of price for the day, right? If you know this is what has been, the pair has been moving for the last 15 days, so most likely anything above that na error, right? Anything above this 131 pips would be probably an outlier. So let me explain now. On the last trading day, which was on Friday, let's look at this now. This was its high. This was it what? Its low. So if you are a trader, you know this is the high of the day already, and we are looking, say, 131. So 131 will be from the high, because the bearish candle 131, 1331, 31. So that's the price will be 1.3186, 1.3186, 1.3186. Let's punch that in. 1.3186, 1.3186. Right, great. So let me make this one a bit thicker so that you get the idea. Or no, I'll make this the high and low thicker so you get the flow, right? So please pay attention. Pay attention to what I'm showing you. Pay attention to what I'm showing you. A lot of people don't trade this way because I don't get it's, well, I don't blame them also, because right education is also very vital in this business. You need to be among the right people. So if you wish, you probably want to join us at Swavali mentorship program. So our PMI, professional mentorship program. This is something you are going to learn from there. But I'm sharing it for free for sticking with me tonight, right? Thank you for sticking with me tonight. Okay. So we know that on average for that, from Friday, price should not move below here if here was the high. So any price below here will be an outlier. That's what I'm talking about. Any price below here would have been an outlier. So from year to year, if you see short opportunity, it would have been good to sell, But when price is now trading above its average range for the last 15 days, that's a problem. So you can see that price actually broke it, but it can't go much further because we're expecting it to go back up. Especially when this happened too quickly, you can see a reverse to its average zone, to its normal zone, to close at its normal area, or usually it will just stagnate around here. It won't move more anymore. But usually what you will see is a bounce back. It's a bounce back. So as a trader, you don't want to be looking for sell opportunities around an area where you know that, or it's more like the price for the day has moved. So you move to another pair or look for another stock or whatever indices, whatever you trade, because it has moved what it should move for the day. What are the odds that it's going to continue to move? Very unlikely. Usually, if you sell in this area, you're on your own, because people might be taking their profit and you can see price will usually reverse. So the case is also for the opposite in terms of bullish patterns. So how do I easily get this? So it's easy. I will just add another average true range, but this time it will not be 15. I'll just put 1. So what you want to do is to make sure that before you take a trade, look at the daily. Can use this only for the daily or the other pair, or maybe you can consider it for the weekly if you want to view weekly. But if you're an intraday trader and you trade between 4 hour, 1 hour, 30 minutes, 15 minutes, whatever, pay attention to what I'm saying. Put it on your daily chart. So the simplest way to do this, because that's what I use, because the mathematics has already calculated. So once you know the average peak movement for that pair for the day, right? In terms of considering its 15 days movement so far, you want to make sure that this average true range with one period is lower than the one of 15 period. When it gets higher than it, that means price has moved beyond its average for that day. You know, when price move beyond its average, you don't want to be in a position again for that pair, especially in the position of the direction of that candle, right? Because it has moved for the day. You just take it that this pair has moved. That's understanding volatility. So you can see it's quite different from what a lot of people think it is. Another stuff people use again is called the standard deviation, but I think that's more complex. But this is one of the most easiest way I think I can explain how useful you can get with this. The usefulness that comes with using the average true range for calculating volatility. Understanding that this is the 15 period average, 131 pip, meaning for the last 15 days, price has been moving on around 131 pip in every candle. So a movement, if for the day you are now seeing that price has moved beyond 131 pip, which is its 15-day average, you don't want to be in a position on that pair. You will not take that signal. You should not take that signal, especially with something like this that maybe on this day it happened, which was the last day. That's why it's showing it. You can see that this was supposed to be the average, this year to year. This let me explain it. This was its high. So a break from here is an outlier. Usually when you see that type of break, price will usually not continue. So if you are a seller, if maybe your system showed intraday is showing you a sell here, you should not be in a sell. Well, that's what I would have done. I would not be in a sell in this area. I could look for sell signal around here, around here, around here, around here. Me, sometimes I won't even do it maybe around here. I usually would do it here, maybe to here. But here would have been, so definitely I wouldn't do it here. Maybe here some cases, but here I wouldn't. Because I feel like, okay, now you can't be looking for a sell signal around here because price has overstretched for the day. Considering its last 15-day movement, its range for the last 15 days. So this is how some form of statistics come into trading. And one of the things I would advise you to do, in case you haven't, or maybe you were not privileged like someone like me, maybe you attend business school or you were privileged to learn statistics, I would advise you to try and go and learn statistics and probability theory, because it will help you a lot in your trading. A lot of people think trading is just, I don't know, I'm not in that school of thought that trading is simple in a way, but not like most of people. Well, there's a lot to do, especially when you understand the business properly and you understand what you are doing. And understanding volatility this way will really help you a lot. All right, guys. I guess you understand what I just shared. Did you understand what I just shared? I just shared with you something really useful. I think it's going to be very helpful in your trading. Using stuff like this, it's massive. It will make you stop to stop those type of trading that, when you get into a trade, it's not looking like the market just knew you got into a trade and is going against you immediately. That should not be happening to you most of the time if you follow these rules I just shared with you. Because most of the time when that happens, you are trading in an outlier zone. An outlier zone, a zone whereby maybe price is usually overstretched and you don't know how to calculate it and you don't understand the concepts yet. You just saw maybe your signal. Entry is the lowest part of my funnel when it comes to trade analysis. The entry is the lowest part. It's not as significant as the other things I do before I get into a trade. So the entry, looking for the entry in terms of maybe that indicator, MACD, whatever, stochastics, it's 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 not really as useful to me as something like this, understanding volatility very well. So you should pay attention to stuff like this. You should pay attention to stuff like this. So at Soar Valley, we offer you all, yeah, man, what you wouldn't even imagine. You get it with us. So you guys, if you want to learn properly how to trade, another tip I will give to you guys: stop paying attention to people that tell you we make 200 p per day. If you check our last guest, Mr. Malcolm, he was saying he has never seen anybody, neither have I. No, I don't think Mr. David has. See anybody who consistently makes a particular number of pip every day or probably every week. That's trash. That's rubbish. Anybody tells you that, the person does not know what he's talking about. To be fair, because volatility can change. If a pair is like GBP, you just saw it's 131. You come there, you can't say you want to make 200 pip for that pair. And on that day, it's very unlikely to happen. Very unlikely to happen. Over for the weekly, depends. So concept is very important. Concept is very important, and these are just normal rookie mistake a lot of traders make. And since you are with us following what we do here at Soar Valley, you should not be making that type of mistake. Especially when you stick with me tonight, definitely you have to get some value today. Right? Okay. So in case you didn't get everything I just shared now, please let me know, because I feel not a lot of you guys might understand it fully well already. So I want to give you guys a little bit of chance to ask me any question right now. Right. Oh, thank you, Mr. Max. So this is basically what I just shared. Pay attention to it. So if you can see now, let's check on the intraday. Let's see. Maybe. So you can see, also let's just say intraday. You can see now that immediately price crossed its average range. Matter of fact, this zone, you can see that it was a major area on the 1 hour time frame for the day. It was what? A major area. You can see it. You can see it here. It was a major area, because that would have, it's traced above it. He had to retrace because this was a major zone. Below this zone would mean it's moving below its average trading range for the last 15 days, and that's massive. So when it's on this area, you are seeing price breaking towards this area, usually to retrace. You can see now. You don't want to be looking, or you are here, you short in this area. You say, oh, price is going down. There's a breakout, in quotes. This is a breakout. This is not a breakout. You can't enter this type of trade, because usually we just change direction. You get a lot of people. There are a lot of people, traders who trade that way. You see, they say, okay, they might call this, what's it called now? Let me use this. Some we say this is probably like a flag or something. It's breaking the flag. Boom. You want to sell here on your own. It went down, but for this, for some people it might be useful, but for me, no, I wouldn't get into this trade. All right. Oh, I guess my screen was not on full screen. So this is basically what I was talking about. So I was saying, let's look at the intraday movement of this daily, because remember I told you to use it on the daily because I feel it's more useful there, or maybe on the weekly also. You can use it on the weekly to see that, right? You can use it on the weekly, and sometimes I use it on the monthly, maybe very few times, but just to know our trading range for the month and see if we've exceeded it. For now, there's still more movement to happen this month of December because average is around 610 pips, but we've just done only 405. So for pound, there's still some movement to go on. So there's still opportunity to go on to take. So if you feel that's useful for you, that's something you can take on. So let's look at it. We look well. I was looking at it at the uh, fifth, the 30 minutes time frame. So you can see this zone was a major area. It broke it a bit, but this is not an area where you want to be selling, because if price was to retreat, it will retreat more aggressively than it will come down. The likeliness of coming down is very low, but the likeliness of retracing back to its range is very high. You can see it started forming what's kind of a support safe on the place from that high I was talking about. So, and this stuff is pretty much easy to use with the way I just showed you. What you have to do, just put a 15 period moving ATRO and a 1 period ATRO below it. What you should be looking out for is just um, is the 1 period. All you have to be paying attention to is the 1 period moving average. I say moving average. Sorry, 1 period ATRO uh, greater than the 15 period. If it's greater than, that means price has moved what it should for the day. Avoid. Why if it's below, like we're seeing on the monthly, it means for this month there's still some movement to go on. On average, for the last 15 months, price has been moving each month for around 610 pips. But this month we've only done 405 pips. So that means we still have to at least say around 205 pips more on average, to go for the month. And that's useful for, especially for people that trade intraday and maybe swing traders. That's still useful. So I think there's movement. But when you see this as it's not higher than this in terms of the 1 period is not higher than the 15 period, that means you should not be in that trade. Even on your entry time frame, you don't want to be trading something like when like me, if I want to enter on the 4 hour, I'll also look at it here also to see, make sure that the 1 period, like this would have been, if I'm saying, if maybe my signal is giving me a buy, I probably would have bought because the 1 period, it's lower than the 15 period. So that's something you should pay attention to. That's one way to look at volatility. So I just showed you guys one good way to look at what volatility. So I hope you guys find this useful. So hope you guys find this useful. How useful do you find it? And you can remember, you can ask me questions. You can ask questions. And also, if you're not subscribed to our channel, please do subscribe because we are putting out a lot of more useful content. All right. So let me know if you have more questions. So I have like say 5 minutes to be with you guys now to take some questions. So that's very useful tip I just gave to you guys in terms of understanding volatility on your trading. So you can start putting that into practice. So the idea is that you don't want to trade in an outlier zone, right? You want to avoid the outliers. That's one of the concepts of using the Bollinger Bands also. So a lot of people don't really understand what they do when it comes to Bollinger Band. Bollinger Band is a volatility indicator. So when you use indicators this way, you know what you are doing, and you know why you are doing what you are doing, right? You know what you are doing, and you know why you are doing what you are doing. Okay. Oh, thank you, Mr. Agbo. Thank you very much. Remember this presentation. Oh, thank you very much, Mr. Michael. This presentation, it's not going to be available. The replay is not going to be available, right? The replay is not going to be available. I'm so sorry about that. I'm so sorry about that. Or maybe we might put it up for for people who think it's really valuable to them. Might find a way to give it out to you guys, but probably not going to be for free, because this stuff I just shared with you is part of what we teach people on our PMI, right? So you see, what we teach people is not just common knowledge. We don't teach common knowledge. If you can get it up on YouTube, then we don't have to tell you or make you pay 100K to do that. No. All right. Mr. Maxwell is asking me a question. What's your take on fundamental trading? Okay, like I told you, I'm more quant based when it comes to my trading. I'm more quant based, but I do follow the fundamentals. And if you see what I do, wow. Well, okay. Fundamental trading basically is for you to note the actual force that's trying to move the markets. Usually for currencies, we'll look at GDP and employment and all that, right? Why for stocks, you usually want to look at the financial data, understand the P ratio, and different type of financial ratios that you should be looking out for. However, most people will use fundamentals for getting the big picture, especially if you are a trader and not an investor. Take note of this, because most fundamentals usually won't play out. Sometimes people will tell you every news is already part of price. So especially with these days of fast high frequency trading, that's one school of thought. But some people, especially some of the traders I know and myself, if we use fundamentals at all, it's not necessarily for predicting price in the short term. Like if you are trading the 30 minutes and all that, you don't want to be using the fundamentals to do that. For you, it's useless. What you want to do is, if you want to put on trade for the long term, you will try to consider stuff like okay, maybe after looking at your fundamental analysis and you've done your analytics work, you've done maybe what you call the discounted cash flow. If you are working on stocks, you've done all your you look for intrinsic value and all that. It's something I do. I have my spreadsheet, and once in a while I do check those type of stuff out. Look at your price to earnings ratio. I would do that. It's part of some stuff we're going to show you at PMI. But however, for entries as a short-term trader, in terms of maybe swing and day trader, you probably don't want to pay attention so dearly to that. Your entry should also always be based on either some form of technical analysis or quantitative analysis, like me. In terms of quantitative analysis on price, that's what I usually do. I do pay, like you said, like you saw me, I do draw trend lines. That's part of what I do, but I will only use fundamentals to get the big picture of direction, or to see the future in a way. But for entry sake, I won't use it for entry sake. Mr. Agbo, is this calculation based on flow or direction of the market price? Okay, the ATRO calculation is based on the range, right? Let me explain this again. I think I should explain that again. See, the ATRO calculation is based on the range, meaning each price you are seeing is each candlestick. Each candlestick, this one starts here, ends here. This one starts here, ends here. Starts here, ends here. Starts here, ends here. Starts here, ends here. So it's calculating the average for the last 15 days of the high to low. You understand? It's calculating the average of for the last 15 days from the high to low. So on average, how has this pair been moving for the past 15 days in terms of from its high to its low in pips, right? So that's the idea. So that's what the calculation is based on. So if you understand average, average meaning you take all the numbers and divide it by the end stem, meaning you take all the range from the last 15 days, you add them together and divide it by 15. So that's how you get the average. All right. So Mr. Agba, I hope I've answered your questions, because I guess that was what you were trying to ask based on how the ATRO is calculated. So as good traders, you want to be paying attention to stuff like this. It's not all about whether MACD or your demand and supply zone. When price has moved above it, it's just like saying, okay, I don't want to bring some physics here. All right. If okay, if you stretch your both arms like this, maybe you stretch your arms, you know, there's a range you can go. Usually, if they draw you more than that, it will start paining you, and usually you retract back. So that's what that's trying to really achieve, especially when it comes to the ATRO. That's what it's trying to achieve. Oh, okay, great, thank you. So, Mr. Mike, okay, you want to get the replay? All right, we'll see to that. Usually when we sell replays, it's around 4,400. So I think that's going to be the price. Usually, I didn't come here to, with any intention of selling the replay. I came here with the intention of, just making you guys get value for waiting. But if you want the replay, we can send the link to you. Are you part of our Telegram discussion group? Mr. Michael, are you part of our Telegram discussion group? And let me know, maybe if not just you and other people are willing to get the replay, we might consider that, probably putting a price on it. Who else wants to get the replay of this session? If you want to get the replay of this session, you can put okay, put it on the comment section. Let me know you want to get a replay of this section. Oh, it's been 1 hour already. Wow. I hope you guys got a lot of value from this. I hope you guys get a lot of value from this. It's been massive because what I just shared with you guys. Wow, 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 wow. So like I said, if you also want the replay like Mr. Michael, please put it, let me know in the comment section. Let me know in the comment section if you want the replay of this session. So my name is Joshua. Nice to meet all of you. 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 Nice to meet all of you guys. Man, thanks for sticking out, staying about an hour. Wow, that's great. Yeah, so if you want the replay, just say I want the replay too. Simple as that. Just put it on the comment section. I want the replay too. Okay, my location, I'm in Abuja. Yeah, I'm in Abuja. So if you want the replay, like Mr. Michael, please just say I want the replay too, and you'll be able to get the replay. Remember what I just shared with you, it's not common knowledge, right? It might look so simple, but not a lot of people think of it that way. That's what separates pros from not pros. As a pro trader, you are not supposed to be making rookie mistakes, and that a lot of people make, not quantifying volatility properly. So good advice for you guys before I go. Okay, good advice. If you want to be a good trader, not just any type of trader, please learn and understand the rules of statistics and probabilistic theories. It's going to help you a lot. Then there's this man, I feel you should consume all his content, like literally all his content. Mark Douglas. You should read anything you see about Mark Douglas on the internet, whatever. Then not something not to do. Do not ever follow those guys that just rent a Ferrari or a Lambo and post on their IG to tell you, hey, they just post a mobile screenshot of their MT4, maybe in quotes winning trades. That's rubbish. Do not follow those type of people. If you want to be a profitable trader and a trader that wants to have longevity, someone who wants to be in the market for a long term, right? Right? Okay, so sorry just now. So if you want to be in the market for the long term, pay close attention to people like Swavely. what we share is totally different than what you see out there. It's useful information that you see how useful it is, not just any type of info. You want to learn properly. And so far so good. If you are interested also in our programs, so hopefully we have two programs running. We have the mentorship program and the, what's it called now, the professional or no, sorry, we have the professional mentorship program and the RTC. So the RTC is basically a course on our website. So if you want the replay, I'm putting it up now. And also you get the replay, and you also get other replays like from our last previous training. That one, only the first session is available on our YouTube channel, but the other two sessions are paid. So you get that, and you also get this. So it's a very good bargain. Take advantage of it tonight. 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 It's easy to get in. Just this link scrolling at the bottom of your screen. It's just 4,400. You can get it. It's that simple. You get this session I'm having with you guys now, and you also get the RTC course. Sorry, the early trading course. That's available for private on a private group. So when you pay, you get access to that group. So, like I was saying, we have the requisite trading course also. So if you need this link, you can just get it now. So let me post the links on the comment section. I'll post them right now in the comment section. So the link I'm posting now. So for the replay, I'm posting the replay link. For those of you who want to get the requisite trading course, which is our line course, it's just 20,000 naira, and it's massive, over 60 videos. Imagine over 60 videos of value such as this. Kai, imagine over 60 videos of value such as this. I don't say much. Really, I don't say much. Just get it. So I'm putting the link on the comment section also. If you want that's just 20,000 naira. So now for the big one. If you want a mentorship where we hold calls like this with you, maybe on Zoom and Meets, you know, or maybe you should, you should enroll for our PMI, which is our professional mentorship program. You should enroll for that PMI. It's 100,000 naira, and you get access to a personal mentor, someone you can literally pick up your phone and call and say, "Hey, I'm having this issue. I'm having this issue. Can we meet, or can we, get on a Zoom call or whatever?" And person sort you out, or maybe something you can just do over the audio call on your phone. Voila! You get that type of person by your side. That's amazing, and you have a classroom full of like-minded guys like you. It's amazing, man. You should enroll for our PMI. You should enroll for our PMI program. So I'm also putting the mentorship ticket. So if it's something you want, our next class is starting next week. So if it's something you want, please get on board. Get on board. Get on board. Get on board. So the mentorship program is just 100,000 naira. So if something you want to plan for, please do. But you should get on this. You should get on. I think this is the highest value so far right now in Swabali. You should get on this. The program is for 7 weeks, but you have lifetime access to a focus group where you can talk to people, talk to mentors, but the teachings, the techniques, this, you are not just going to learn copy and paste. You are going to learn how to build yourself as a trader. So I think it's very valuable. Even the RTC is also as valuable as you can imagine. So tonight you are getting it for just 35% off. Just 20,000 naira. Get it, man. Get it. Get it. Get it. Get it. Get it. Get it. So for the replay, if you want the replay, there's the link also for the replay. So everything is on the comment section. Sorry. So everything's on the comment section. If you want the replay, this is the link to get the replay for just 4,400. If you want the requisite trading course, which is the course contains over 60 videos, like a lot of bonus materials, spreadsheets, and whatever. Well, most of the stuff we use are on this course. For just 20,000 naira, you are getting all that. I think that's valuable, man. Imagine getting all that. And you can see what I just shared in just how many minutes, and you're getting that. I don't want to say too much. Just understand what I mean. Then the awesomeness of the mentorship program. This is less than 1,000 US dollars. Just 100,000 naira, and you can get a mentor from Swavely to literally hold you by the ends, and walk you through it. So you should get on this stuff. You should get on this stuff, right? You should get on this stuff. So the link is available now. You can get this replay for 4,400 if you want. You can get the RTC for just 20,000, and you can get the PMI for 100,000 naira. So you just see all the links, right? Thank you very much. Right, thank you very, very much. Thank you very much for being part of this session. Grateful. So yeah, Mr. Max, nice to meet you. Nice to meet you. Nice to meet you. Okay, all right, this we did. I guess, yeah, what do you mean you enjoy the program, right? Okay. So I'll be going off here now. Right. Thank you guys for being part of this. So like I said, if you want the programs and if you want the replay of this session, it's available there. You can get it. So take care and have a good and blessed trading week ahead. No, the markets open and say 11 o'clock tonight. So let's all, just get along and be good. Right? Learn well, reach. Oh, by the way, maybe I should recommend the book. I probably will recommend Ray Dalio's Principles. If you've not read that book, go and read it. Okay, let me add one. Mark Douglas, Trading in the Zone. Go and read that book also. Those two books are really great. They help your mindset in this business. So, and there's a lot of Mark Douglas videos on YouTube. So please check them out also if you can. Right, check them out. Mr. Max, thanks. All right, guys. So catch you on the other side, maybe on the Telegram group, Discuss group. Go and tell them what you have been learning now on that group. Yeah, on that Discuss group, please go and share what you've been learning here on that Discuss group so that the people will be jealous for not joining us. All right, take care. Have a nice week.